Your paycheck lands at 9 a.m. By 9:05, none of it is spent, but most of it already has a job. Not because you logged into a budgeting app, because you routed it before your brain could touch it. The traditional method tells you that control requires tracking. Every single dollar gets a category: coffee, groceries, dining out, utilities, subscriptions. On paper, it looks precise. But that precision carries a hidden tax: maintenance friction. A budget that requires high willpower only works on your best days. When you finish a 10-hour workday, the last thing your brain wants to do at 11 p.m. is open an app and split a $47 receipt across 3 different categories. Then life happens. One purchase contains groceries, household cleaner, and a birthday card. One irregular annual renewal hits a week early. Now your spreadsheet doesn't match your bank account. You don't fail because you lack discipline. You fail because you built an operating system that needs constant manual intervention just to survive. Categories describe spending after it leaks. The mechanism is cash flow routing, moving money before your behavior can break the plan. How the routing architecture operates. Most people use a single checking account as both the landing pad and the spending pool. Money arrives, sits in one pile, and every daily purchase drains the same balance that's supposed to pay rent 3 weeks later. Cash flow routing breaks that cycle by separating the money by function the second it clears. Look at the exact numbers on a standard $4,200 paycheck. Route 1, fixed obligations $2,450, rent, debt minimums, utilities, and insurance move immediately into a dedicated bills account. This account has no debit card tied to your phone. It exists purely to execute automated auto-pays. Route 2, capital protection and growth, $750. $400 moves directly into liquid reserves. $350 routes straight into long-term goals. This money never sits in checking, meaning you never feel like you have it to spend. Route 3, irregular sinking costs, $300. Car registration, annual renewals, holiday travel, routine maintenance. These aren't surprises, they're predictable costs with irregular timing. Routing $300 every month neutralizes them before they can derail your month. What survives all 3 routes is $700, the remainder. That $700 doesn't need a label. It doesn't need to be sorted into coffee or entertainment. You can spend it down to 0 because every critical priority has already been funded, automated, and defended. You don't need complex software to make this work. The baseline architecture is just 2 accounts. The buffer account, where income lands and mandatory bills auto-draft, and the daily spend account, where your weekly allowance transfers automatically every Monday morning. When your daily spend card runs dry on Friday, you don't adjust a spreadsheet. You wait for Monday's transfer. Your rent was never at risk. This is an educational framework, not personalized financial advice for your specific situation. Stop building budgets that depend on your memory and willpower. Build a pipeline that protects your future automatically. What's the one recurring expense that consistently derails your monthly budget? Let me know in the comments.